To the American Business Television Currency Report for January 8th, 2021. The U.S. dollar is trading in familiar ranges as markets react to the negative figure in non-farm payrolls from December, indicating there was a contraction instead of an expansion in jobs created. It's the first time since April that this happened, following a rather turbulent end of 2020 that witnessed winter exacerbate the spread of the coronavirus. The economy shed 140,000 jobs instead of seeing an expected estimate of 50,000 added. The unemployment rate went down to 6.7% from 6.8%, while average hourly earnings did increase by more than expected at 0.8% over 0.2%. FX flows at the time of writing seem steady regardless of the figures, as optimism keeps piling over the effects of a more robust stimulus that could be achieved from incoming Democrats with the agenda to spend as well. Federal Reserve Vice Chair Richard Clarida spoke today at 11 a.m. His comments will be monitored for mention over how long he expects a very accommodating environment, as he is the one to have argued the economy can afford to wait for much higher inflationary growth before any intervention by the Fed on interest rates. Markets could reflect on a poor December and take a seat back today, or relentlessly move forward as vaccination distribution is expected to pick up pace in the next month and beyond. As of now, the Bloomberg Dollar Spot Index is where it began on Monday. The Eurozone has not given us much in terms of news or big movement, but Italy is once again testing its ability to spend beyond EU suggestion. Prime Minister Giuseppe Conte proposed the spending of 220 billion euros in his most recent budget plan for the pandemic. It's a larger figure than thought, but it defines the use of funds that emanate from the large EU rescue package. We shall see how much data releases affect the common currency next week. The Great British Pound has also not given a ton of headlines, but Prime Minister Boris Johnson wants a more aggressive approach to vaccinating people. Because of a very strict lockdown that has also been implemented in London the last few weeks, traders figure that indicators will weaken and could give room for the sterling to cede some ground. Next week should see more action as experts gauge the impact of December and on the economy. Thank you for joining us. Please join us again next week for the American Business Television Currency Report.